Time to check in with Amanda Lang. She's a business reporter with BNN Bloomberg and host, of course, of Taking Stock, which you can hear, by the way, anywhere on the Iheart Radio network. So, Amanda, let's talk the economy. You have the Canadian economy expanding at an annualized rate of 1.7% in the first quarter. Wonderful headline that I saw after the number was released was, are Canadians working hard or are we hardly working?
Well, that's not very nice, is it? I think we're all working hard. It was below the Bank of Canada's expectations for sure, which was, I think, 2.7 or 2.8%. And it was below what some bank economists were looking for at 2.5%. So it is a weak number. It's also, I should note, below kind of historical trend for our country. We don't ever really grow gangbusters, but we should expect 2.5. It probably opens the door for the bank to cut rates next week if we want to look at the glass half full aspect of this.
So that cutting rate story seems to be getting a lot more momentum. Even before these numbers came out, I saw something, I think it was from the C.D. Howe Institute, suggesting, you know what, let's not wait any longer. June, let's get one there. And then two more before the end of the year. That's pretty significant.
Yeah, I mean, I think most people do expect to see that much of a reduction by year end. The question really is, does it start next week or not? And for sure, the betting has increased on next week. There are still some holdouts, and I'm going to put myself in that category. Not to say that I know what the bank's going to do, but just that there's still a strong case for one more wait till the next meeting. Only because you do want to see that inflation data get right where we need it. The economy is not terrible. We don't need to juice the economy by cutting rates. And so I would say we're in kind of that zone where the bank could hold on if they really wanted to. Now, the temptation, of course, for them to cut is, for most people now, the biggest expense it has to do with higher rates. Whether that's mortgages or some debt you're carrying, businesses for sure are feeling it. So the bank has the lever that would quickly reduce the pain on people. The danger is once they do that, we will spend too much and kickstart inflation. So that's kind of the thing they're worrying through. And if they're risk averse, they'll stand pat next week. Yeah,
you kind of wonder, though, this whole idea of mortgages that are coming due and what a huge part of the economy that represents in this country. And then you wonder at the same time, bring those rates down. And do we start to see home sales increase when rates start to come down? It seems like people are almost bracing for that.
Yeah, I mean, there's definitely some thought along those lines, and I think the bank is very aware of it too, that we still have a problem to solve with housing. And of course, it cuts two ways, because on the one hand, we don't want to go and generate a frenzy of activity. We don't want people buying if they can't afford it. On the other hand, we also do want financing for building to be affordable for developers, and they're telling us that they're feeling it. I'm also in the camp, this is just because I'm an old person, but I can, to me, a normal interest rate, our long-term average, is around 4%. So it wouldn't take much of a decline from here to get to where we should be, in my mind. Now, people are used to rates that are way below that. I would just say to folks that are worried about resets, I don't think you should expect to see mortgage rates go back to those 2021 levels anytime soon. They shouldn't, unless something goes off the rails and we really need to help people out and the economy's in a deep recession. We're not going to see that. So we do have to make the adjustments that people have been making. And for folks that are facing those resets, you might get a little bit of relief off the worst, but don't expect it to be at the rate that you went in on.
Yeah, you being old, almost possibly as old as I am, this idea of getting used to, easy credit, low interest rates, mortgage rates, et cetera, people get used to that because it seemed to be going on forever, year after year, but that's really not a fair sort of assessment for the Bank of Canada to have to concern itself with, right?
It isn't. And I think because we had such, the pandemic created such a kind of a punctuation on our economy, it's actually not a bad time to reset and say, look, this is more realistic and this is where we should be. Not that post-financial crisis, right? We got down to zero and we kind of never really got back to normal after that. So it is, and the other thing to keep in mind is governments do it and we do it. When you take on debt you can't afford, somebody is left holding that can, and it's often the next generation. So we do have to kind of think about living within our means at every level, because there's kind of a moral justice to it, if I can put it that way.
Yeah, and by the way, I should mention Canadian banks all reporting this week, and I think the one thing I noticed across the board, outside of them doing rather well, and I think Royal Bank's almost at an all-time high this week as far as its share price is concerned, it's this idea of what they call loan loss provisions, right? They're bracing, they're expecting that there will be people, and I imagine if the interest rates don't go down, it might just get worse, who will not be able to fulfill some of those loans.
There will be people who have trouble. I would say the banks have been super prudent, and so they've set aside, yes, billions for loan loss provisions. What we often see, Aaron, because our system is it lacks the kind of like thirsty competition of some other markets like the U.S., the banks can be careful. They can afford to be. And once we get through this period, and yes, there will be some people who have to write off their mortgages, but maybe not that many,
Right.
You'll find those loan loss provisions turn into giant profit centers for these banks. It drops to the bottom line because they don't need it. I'm not saying for sure, but that tends to be what our banks do. They put aside more than they need for that rainy day, and it just ends up not being as bad as
which
this
is
year.
which is why Canadians have good faith in our banking system compared to, of course, south of the border. I'm curious, do you think that this is the kind of thing that, first of all, with respect to the banking reports this week, all the earnings reports, were you surprised by this or not, that they've done as well as they've done?
No, I mean, certainly a couple of the biggest banks, even while they report strong profit, they're down from the profit they reported a year ago. And so we are seeing a reflection of tougher times. But some of the banks did well on capital markets, which is, a sign of what's happening in the investing world, not the economy. So no, I thought their reports were a pretty accurate reflection of where we are, which is things are not so bad. Things are pretty good, but they're not amazing. These are not the strongest reports I've ever seen. And to your point, they're going to be a little risk averse. Now, one thing we should say is we like our banks to be cautious. We want them not to fail, of course. But the flip side of that is we also need them to take risks on Canadians. We need them to be lending out to small businesses, people that actually want to take money and grow things and build things. And so, at the same time, we don't want them to be too cautious right now. If I were, urging the bankers about anything, it would be, don't forget that you can afford to take some risks. You've got billions in profit. You kind of owe it to Canadian businesses to let them have some capital.
All right, last thing I want to touch on, which is interesting because I saw a story on EVs actually just today, but it looks like Canadians' interest in buying electric vehicles is beginning to fade.
We could have predicted this a little bit in the sense that, as subsidies come down, the price of the cars are still expensive. The charging stations aren't there yet. I mean, it all kind of adds up to, are we ready for this or not? The big debate that I've been kind of interested in is what we do about, for instance, Chinese EVs, which are ready for market. They're super cheap. We could get them tomorrow, but our big trading partner south of the border is blocking them with 100% tariffs. Do we follow suit, or do we say, look, we need to get EVs going, let's bring them in? That's, our government has yet to decide. I'm going to guess we sort of follow suit. But yeah, we have a mandate, a target to hit on, non-internal combustion engine vehicles, whatever that looks like. And I don't know about you, but I'm not feeling super optimistic about it.
Yeah, and still very expensive. I know costs have come down, but we're not at the point yet where we can say now everyone can afford one. And I'm sure that's part of the reason a lot of people are still not there. Amanda, thank you so much. I appreciate it.
Always good to talk.